days, one 10 days, one for the past month. Now you might be asking, as a day trader, why are we looking at the bigger picture? It's because I want to know where we are on the chart and how we got here. Christine's asking, how do you decide your buy and sell points? So let's just take a look at this intraday chart. 2 days, 1 minute. If you notice, I have no technical indicators on here. It's just drawings of trend lines and horizontal support resistance or boxes. And what have I highlighted? I highlighted an area that we interacted with yesterday at multiple levels. And then as the day has progressed, I've highlighted those levels as we climbed and as we are stumbling a little bit. Notice I can clearly see this on the 5-minute, 15, 30, and 60. I can also see it on this daily perspective. Not only are we challenging yesterday's high, but we're also interacting with the kind of upper end of a channel projection from the previous peaks in this staircase. So let me ask you a question. How many people, if you were a day trader, would buy and go long right now? Okay, let me lower the hands. A couple people raise their hands. If you make that decision, what is the most important decision? It's your next decision, folks. Where are you going to sell it if it goes up? Where are you going to sell it if it goes down? You're creating the risk reward of the scenario that you're assessing. What is the purpose of buying here? What's the target? Remember, as a day trader, you are opening and closing your position in the same trading day. That's the literal definition. Swing trading is anything that's a short-term trade, basically, that's not a day trade. It could be a day, 2 days, 3 days, a couple of weeks. But the goal is you are opening and closing the risk in the same trading session. Okay, this is not, hey, if I buy it and it doesn't work, we'll see what happens tomorrow. That's losing day trading. Okay. Now, there's also the industry's definition of day trading, which is trading in a margin account. So this class is focused on the concept of day trading, not the industry's definition of what constitutes a day trade. Okay, that gets into your buying power, that gets into settlement times. You can day trade in a cash account. You just have to be mindful of the settlement times, which I believe for stocks, Peter, correct me, has been accelerated to trade date +1. So it's not instant. And you can't just recycle your cash buying power the same day over and over, but it is relatively quick if you have enough cash surplus. So what do I have on my bigger picture? I have concepts of trend. Let's zoom into this daily. Notice I have a singular trend line, moving trend line based off the 5-day SMA. And why do I have this? It's because I'm a very short-term trader. So I don't care what the longer trend is. I only care, are we trending very strongly up or down? And we can see this on various securities or sequences on whatever security we're looking at. So during the powerful sequences, what do? We typically don't even challenge the 5-day SMA. If that breaks, am I going with or against the very short-term trend? Notice today, where did it try to hold up? Roughly at the 5-day moving average, and now we're trying to test the peak. So let me flip this around. A few of you raise your hands, but not a lot of you. How many of you would short the S&P as a day trader right here? And folks, we're watching this happen in real time. Like this is the live market. So what is the target? What is the goal? And then most importantly, if it starts to bounce, where is your exit? So you can see I've created basically what I call a game of shelves. I'm not sure if any of you are fans of Game of Thrones on HBO or House of the Dragon. So they got Game of Thrones, I got the game of shelves. And what I always try to look for is if it gets through one shelf, notice the sequencing at the beginning of the day. See how it stalls and then breaks through the concept of trend? It breaks through this trend line by going horizontal. Okay. But notice what it does. It stays above the prior peak in the sequence and bounces and then finally breaks through to the upside and basically goes in an uptrend just along a slightly different trajectory. What is different about the current price action compared to earlier today? It didn't repeat that sequence. It stopped repeating that sequence. So if I wanted to be a bear right here, I know, number one, that not only has it failed to make a new peak in today's day, it's failed to make a new peak from yesterday, which is also failing to make a new peak in the bigger picture. So if I was to take a short here, I know what I don't want it to do. I don't want it to bounce at one of these shelves and make a new high. That would potentially invalidate the premise that I just entered my trade on. So hopefully that gives you a sense that there is no correct way to do this. And Peter, when I kick it over to you, I'm sure there's some similar stuff you look at, but I'm sure there's some stuff that's different. There is no correct indicator. Why do I use the 5-day SMA? It's because I used to use the 6-day EMA based off MACD, which uses a 12 and 26. The difference of those is used to create this red line. But I never liked MACD as an indicator personally because it didn't give me an ability to visualize what was going on. You can see here from this perspective, this is a weekly chart. And notice how MACD kind of flatlines and starts curling lower. And what that represents is that the 12 and the 26 EMA are getting closer together. But if you look up at the chart, what do you notice? Price didn't stop going down, it just started going up slower. So I did something like this where I added the indicator visually. So if this will cooperate here. So by default, it's going to be at 20. I'm going to modify it to 12. I'll make this color here. Make it purple. Apologize for the lag, folks. I have probably so much stuff on the screen that it's not responding quickly. So got the purple line. Let me bold it actually, so it really jumps out. And does that generally give me an idea of trend? Yes. But if I zoomed in there was plenty of times where it was elevated way above it to the point where it wasn't a relevant consideration for me as a day trader. So I just sped it up to a 6 on the daily. And then I eventually switched it to a 5 SMA to match the popularly followed 50-day and 200-day moving averages. And the 5 SMA and the 6 EMA basically give you the same visual concept here. And then I added Bollinger Bands, which are volatility standard deviation based off the 20-period moving average, because I felt like that gave me an idea of how to handle situations that were very extended away from that concept of moving trend. And then that's it. You notice there's no volume on here. I get that question a lot. And the reason why is not that volume is not useful information. It's just, it never changed the decision I would make based off just the price alone. And therefore, it was basically unnecessary to my decision process. So hopefully that gives you a perspective. I basically started with variations of different things that other people use, and then I tailored it based off what my preferences were. I got rid of anything I didn't feel like helped me make a better decision. And that's what I show all of you every single day in the briefings. If you don't see it on my chart, I don't use it. And then by definition, I feel like it is either basically useless or irrelevant to the decision-making process. Your version might look very different, and you get to decide that. That's the fun part of this. So Pete, why don't you take over, show everybody your setup, and any questions that have been coming in we can address. So Christine, there is no right or wrong way to pick the price. You get to pick it, whether it's based off some past level, whether it's based off some concept of, like Fibonacci projections, right? Maybe you look at derivatives positioning. Is there a huge open interest at a certain strike price that you think might create some type of pinning action? Whatever. You just need to make a decision and then be ready to execute your plan depending on whether the version of the market you want occurs or you start getting the other one. So before you take over, Peter, anybody who raised their hand that said, as a day trader, I would take a bullish position, I want you to ask yourself this question: would you still be in there now? If the answer is yes, okay, where would you exit? Remember, this is not about, hey, I'll enter here, and if it goes down, maybe it'll bounce back next week. If you are a day trader, you're trying to capture what's literally happening this day. Over to you, Peter.
Yeah, we've talked about this before, and process of mine somewhat similar or adjacent to yours. I'm sure some of what you all have out there in the audience is going to be similar as well. I'm going to try to grab the screen. Full disclosure, this is similar to what I have. Let me answer or at least address a few talking points and then getting into it a bit more. Oftentimes on my own setup, I will actually have an options chain, kind of up in the corner. Maybe not these few quotes per se, but I know there was a question that came through about swing or day trading options, which we can look to get into as well, Scott. So I'm right there with you. Often I will have an options chain in the top right corner. I think as I begin to describe my setup, which once again, a variation of Robert's, I'd say, find out, I guess, what works for you, helps you make decisions. I'd echo that from what Robert had mentioned. So many of you have asked about whether it's specific indicator, whether it's a specific, perhaps incorporating volume profile, perhaps incorporating Bollinger Bands, perhaps incorporating extended hours trading or not, or this, that, the other. You are, like Robert said, going to evolve over time and be changing, and you want that evolution to be for the better. And that's why, at least as one of the numerous layouts or setups that I have, and taking a look at an individual name, I'm going to have these all linked. So taking a look just here as an example of the S&P 500, up here in the top left, more of a longer term view, 6 months. Maybe I'll take that out to a year, but I've got the ability to view something on a longer term basis, longer term, of course, daily frequency, moving averages, and technicals when it comes to, as you all have seen me in the market briefing, all of the other types of pre-built tabs that I have. Now, getting more granular, of course, into more of that swing trading or day trading option, I'm looking at a 5-day, 10-minute, and I do a 2-day, 3-minute. So is that exactly what Robert had? No, not at all. Is it somewhat similar? Yes. But regardless of the actual timeframes, frequencies, does it help me, at least in my decision-making process? And 3 minutes for me is about as low of a day trading frequency that I'll find. I don't get down to 1 minutes or 2 minutes. 3 minutes works. And my moving averages that I have are a EMA, so 7, a 20, and a 50. No magic towards that, aside from the fact that I've identified on strong or momentous moves, much like we had seen here towards the beginning of this day. If it's respected something like that 7-period moving average, respected, a little bit of a pullback. Is it going to show any signs of maybe respecting something like a 20 or not? Is it going to show signs of respecting like a 50 or not? That is more or less not a hard fast trading rule that I have for myself with day trading concepts. It's more of a guidelines or bumper rails to say, if you see a strong move on the way down over here, folks, just yesterday, it's respecting that very, very fast concept of trend lower and captive underneath it on the way up. It's respecting it there as well. Now, you can also see just this horizontal. That's just something I had dropped there even before it stalled temporarily on the way up this morning because, well, a few days ago on Wednesday, on the 10th of July, identified on this chart, well, it had somewhat of a trend and then really launched. Towards the end of the day on Wednesday, it begins to get parabolic. Also identified that yesterday, it really gave that up, traded for a moment, and then traded back down lower. And on the way up right now, we're seeing that it's actually stalling. So taking this back towards more of a day trading concept, you might not like this look and feel whatsoever, but at least for me, or like Robert was saying, if you're going long here, if you're going short here, that's another point of emphasis as far as how you're going to be managing these trades. If you truly are day trading and you're thinking about cash to start the day, cash to end the day, a few things that you want to know are you a long only and you're not able to, or you don't really want to take the short side of things? That might be okay if it's broken certain type of concept of trend. Then I'm going to go ahead and actually close out, be on the sidelines versus maybe flipping that strategy and going from long to short or vice versa. So do keep that in mind. Now, if you were trading off of some type of thought that, well, maybe it's going to go ahead and catch some type of bounce on a concept of trend or just above some previous point of resistance that might now turn into support, you've got the ability to go ahead and be counter trend. And I think that's the big emphasis that I'll give for just a moment. And then I want to incorporate some of these questions as well, or look at some exact examples. A few things that I say, folks, if you are getting into a trade, do recognize when we're looking at a short-term day trend basis, looking at this trend that's headed lower here, this is short-term, of course. But if you're buying here on this so-called dip, know that in the short-term basis, talking just the last 30, 40 minutes or so, you are being counter trend. Where are you going to be drawing that line in the sand to get out? And if you wanted to buy on some concept of maybe a moving average, you got to know, okay, well, if it's breaking this horizontal support, that's when I'm going to need to go ahead and get out, reassess my situation, or perhaps flip to a short from a long if you are counter trend. If you're going with this trend, you might be thinking, well, let's go ahead and see if it bounces here and then how it tests. Is it able to get back above where it traded at just 15 minutes ago or so? Or is this now maybe in the grand scheme of things for this very short day that we have, a very short morning so far, going to ultimately be just another lower high in the grand scheme of things on the way down, much like we had seen over off on the left-hand side of the chart here. So two pretty, I guess, momentous moves, which I think is a great parallel to go ahead and take a look at. There are opportunities here, but there are also risks. Day trading, folks, can be very, very difficult. It is going to be a lot of the mental and emotional side of things, just as much as it is going to be technical, which is why you're going to want to find some type of system that allows you to take some of that mental angst and emotion out of it. I think on the shorter term perspective, you do have to recognize that you're going to need to take some losses. A few phrases that I've always heard, clients say over the past, and one thing that I can raise my hand, I've had to learn the hard way. How many of you out there have maybe been in a trade, quote unquote, something you had planned on making 20 bucks off of, 100 bucks off of. Now all of a sudden you're even, then it drifts lower and lower and lower. All of a sudden you're staring at something that's 5 times that profit target that's now looking like a loss. And the first thing I at least can tell myself, and I do see some hands out there, I'm not trying to pick on anyone, I would say, well, I'm just going to hope that it gets back to break even. Folks, the market does not know, nor does it care what your cost basis was, what your break even was. And if you are going to be day trading, especially swing trading on the shorter end of things, you echo that, yes, it matters on the longer term perspective as well. But depending on that leverage that you might be having in your portfolio and depending on your position sizing, you are going to have to be able to take a loss, understanding that if this was, let's say, to break this level, let me just draw this out maybe for a moment or two. Let's say, as a pure example, you did get in on this blue line touch, and that your out was going to be if it broke down lower below 56.16, you have to be okay taking this bit of a loss and then reserving the right to have your analysis moving forward. And if that analysis is, if it's able to go ahead and actually get right side up and hold what that loss was, then maybe you're going to be getting back up and in at 56.20, hoping for it to be able to challenge and actually continue higher. But if you're not able to, I guess, award yourself the right to be wrong, take a bit of a loss, build your cash back up and be ready to pounce on another opportunity versus just hoping that a position that's heading lower, lower, lower turns around so that you can get back to break even. It's going to be very, very challenging, I would say, from the emotional standpoint, which I think many could argue is the hardest part about day trading.
Yeah, Peter, let
Robert,
me emphasize. Yeah, let me
yeah, let me
emphasize that
pause there.
point, folks. There's two things the stock or the index can do. It can go up or down. However much time you spend deciding which one you think is going to occur, as Peter pointed out, nobody cares about that but you. So for me, I try to prepare as much as possible. This is why, so even though my time in trade a lot of times is just very quick, I spend hours on this. When the day is over, I start charting for the next day. Then I watch the futures basically all night. I usually sleep about 4 hours a night during the week because I want to know how the battle was won or lost. And then basically, I just try to react to whichever version, the bullish version of today looks like this. Rallies all the way to the previous fail point. Now it's stalling a bit. Does it completely fail? Does it check back? Because how many algorithms and traders are looking at that last level? They decided to sell. Now we got to see, does it hold up and power through, or does that reinforce that area, at least for today? So basically, my decisions are made before I'm ever seeing what's happening. So that's that preparation part. I don't just wake up or, oh, I got 10 minutes of free time. Let me bring up a chart and see if I can figure this out. Now, I'm not saying that's not possible. It's just not possible for me. I need to be as prepared as possible in order to feel comfortable making decisions, especially when the volatility picks up like it has the past couple of days, upside and downside. So Peter, let me steal the screen because there's a lot of great questions coming in. Let's see here. So Christopher's asking, what time frame do I use for entry and exit? I use all of them. That's the purpose of looking at all of those different perspectives. Let me replace the screen share. And someone was asking, is my heat map multiple watch? It's just the same watch list, but I have it grouped by sector. So it looks like it's split up. If you do no grouping, it's just going to look like a regular heat map. Okay, so I'm just trying to identify, since I primarily trade the S&P, what's happening overall in the market. Now down below, you can see the NYSE advanced decline is heavily green. This is what happened yesterday. But the mega cap tech had a violent pullback, and the sheer mathematical weight of that caused the S&P market cap index, which is what the SPX is, to go down about, right, a little less than 1%. So we can see today that both the equal weight and the SPX are up. Part of that is because NDX is up, whereas NDX got hammered yesterday. So somebody's asking, how many time frames do you need to look at? And the answer to that is you have to decide that. But one thing for me personally is I would never be a day trader and just have this as my screen, because I don't know where past battles were won or lost. That's why I'm always starting zoomed out. Where are we on the bigger picture? Because I don't want to run into a brick wall on either the upside or the downside. And I want to know where other traders are paying attention to, because that's where their decision process comes into play. And the price either goes up or down based off whichever side wins or loses all those decisions smashing against each other. And there are big investors, retail traders, but it's mostly algorithms on any given moment. How would an algorithm make a decision? Okay.
Rob, if
Yeah, go ahead.
not to step on your, just to dovetail with how many questions are coming through, if you don't mind, I'm going to try to just tackle a couple of these at the same time. But folks, what Robert's just alluding to answers a question that a few of you had. Chena was asking, how many time frames do we need to look at one time? I mean, one, the answer is always that's up to you. But like Robert's saying right now, I think it would be foolish to be day trading without looking towards those previous battles and as many time frames. Like Robert just mentioned, there's algorithms out there that are programmed to go ahead and look at where these swing highs, swing lows have been the previous day, day before, 2 days before, whatever it might be. So that's at least the reason that I have kind of those 5-day views, 10-day views, 6-month view to see if there's anything obvious that pricing might be kind of a magnet clinging towards. So want to keep it brief on any time that I cut in here, Robert. I hate stepping on your toes, but Gina, how many time frames do we need to look at? I think timeframes are important to the point where you're looking maybe at these pivots or where previous battles were. I hope that's what you were speaking towards.
Yeah, and there's a couple questions about, do you trade in the extended hours? Me personally, no, I just watch. So this is the 2-day perspective on SPY, including the pre-market. Now, from a catalyst standpoint, yesterday we got what? CPI, Consumer Price Index. We also had earnings from Delta, Pepsi, and Conagra, I believe. And the initial reactions to all three were lower. So futures were actually down a little bit ahead of the report, and then notice the spike on substantially cooler than expected CPI and then the reversal. Raise your hand if you were surprised that that's what happened yesterday. Okay, let me lower the hands. This morning, we had mixed initial responses to some financials, Wells Fargo, Citi, and JP Morgan. We also had hotter than expected PPI. What was the initial reaction? It went down. It was down about 14. And then basically instantly recovered and started pushing higher. Let me lower the hands. How many people were surprised at today's response, at least until now? Okay, let me lower the hands. Here's the purpose of me asking. If you raised your hand both times, why is that? If you just saw something that surprised you, however you process what your expectations of what the reaction would be, why would it surprise you again to see the same thing? So this goes back to, it doesn't matter why something's happening. Hopefully that makes sense. Like, I've been here before. I'm like, oh, what the heck's going on today? I'm not, hopefully I am not talking now. I'm trying to help you understand that if you try to think your way through why something's happening, as a day trader, you have to recognize it doesn't matter why it's happening. Now, if you had a watch list up like I did, you would have been able to see that there was a massive rotation into small caps. So let's now flip over to IWM as a proxy for the Russell 2000. Notice the difference in how the 2-day sequence looks, at least so far. Small caps popped and didn't pop back. You could see this on a heat map. You could see this on RUT versus NDX. So these are non-technical things that I feel aid me as somebody who tries to trade the S&P 100%. And if you look at QQQ as a proxy for the NASDAQ 100, this contains a lot of those large mega cap stocks. You can see, even though the market breadth was amazing yesterday, because of what was going up and what was going down, did you want to be a bull in the S&P yesterday or on the Qs? No. So there are days, let's go to 5 days. So there are days that start strong and keep going up. There are days that start strong, pull back a little, and then go up. There are days that start strong, pull back, try to go up, come back, and then just ping pong. And there are days that try to go up and then reverse and flush. So as much as I tried in almost 30 years of doing this, I was never able to figure out which one was going to occur. Market that tries to gap up and go, and that's what I nicknamed it, the gap and go, whether to the gap up and go push or gap down and flush. Or is the gap up and pull back and then go up? I call those the pump fake. So for you basketball fans. Or was it the gap and trap, where it tries to gap in one direction and then reverses? Whether it occurs in the cash session or before is the same concept. And then there's the one that tries to go, comes back, but doesn't go down, tries to go, and those are the choppy days. I noticed somebody in the audience asked, how do you deal with the chop? And my goal is to try to avoid that at all possible. So if we look at a 10-day chart now, you're going to see times where in the white space, which is the cash session, there's clear trend, at least for parts of the day. And there's other ones where it doesn't do anything effectively. I'm going to circle or highlight one that comes to mind. Right here. So what I try to do is just identify, as it's happening, is this a day that's going to end up as a bunch of chop? Or is this a day that's going to try to actually move? And what I do is I use the first basically 30 minutes to an hour. Again, there's no time frame. And therefore, if it just pushes and goes, or does it check back? Notice the difference between these two sequences. I pointed this out in one of the briefings. These were the 2 days of, this was the 1 day of chop and then the 1 day that kind of swung around and then pushed. Notice how it's different. This one tries to go up, fails, holds, goes up, takes out the peak, holds above, pushes. So it leaves the range from the beginning of the day. What did this one do? It fails to complete that sequence. It tried to pop out later, but then dove back in. So this is a situation where I probably wouldn't have entered, but if I did enter on the concept of breaking out of this range, my process says I have to close if it goes back in, because it basically instantly invalidates the reason I entered that trade. Again, my goal though is as soon as I start to see this chop, I don't try to trade that. at least at my age. When I was younger, I was trading all the time, no matter what. So I try to find the days that trend. This is the same perspective on 15 minutes. And again, everybody gets to make their own decision, but isn't it clear sometimes that it's trending up or down? And on the days that do, I just try to ride the train and then set a target and get out of there. So you can see here in this sequence, I'm not about to try to predict if it's going to break through the battle. So my target would probably be short of this prior peak. Is that relevant right now as a day trader? For now, I would say yes. It doesn't mean it can't go higher later like this one. And if you're a bull, this type of sequence is what you're looking for. Pop and drop, gap and trap, whatever you want to call it, doesn't follow through to the downside. It inflected down in the pre-market, then holds. And when it didn't go down, volatility's picking up, tries to go back up. What happened? It just shortfalls. And now it's a trickier sequence of decisions on the chart. Let's go over to some different securities, talk about some different risks. Let's look at Tesla.
And Rob, while you're doing that, one thing as you pull up that chart, folks, when you're if it's catered towards day trading, once again, you do not have to trade. I think that's one big trap for a lot, is that they think, okay, hey, I'm going to be a day trader. What does that mean? Well, my job is trading in the market each and every day. If you try to force something where you're not seeing a clear pattern, uh, folks have heard me say this before, the easiest way to make money is to not lose money. And if you try to force something that doesn't fit the mold for your probabilities, your trade method, and you just say, well, the market's open, I got to trade something, don't I? That will be very, very challenging, at least I would say, or I have found. There are no shortage of opportunities out there. And if you truly are a day trader, there are going to be opportunities tomorrow. So rather than trying to make a buck today and lose it, now you've got to quote unquote make $2 tomorrow. That's another trap. If you're feeling like the trade that you're about to do is going to make up for the last one, that also would be just, I think, anecdotally, very, very hard, mentally draining. You have to be okay looking for opportunities and then not going your way. Other joke I say, if you don't have the buying power to move markets, sometimes you just got to go with the flow. But I just wanted to add on that. Don't get trapped into thinking, well, the market's open, I have to be doing something, right? And scrambling for opportunities. The beauty of day trading is that you can have a setup that you feel comfortable in, looking for opportunities, being able to wait, trying to avoid some of that chop, like Robert was saying. And if you show signs of some type of momentous move, that's what you're trying to capture, harness, and ride, as long as feasibly possible.
Yeah, so Tesla's always been a very volatile stock, like much more than the market. So let's think about the things we just talked about on the S&P. Let's go to a 1-minute chart. Look at the chaos right at the open. See the whipsaw? Zoom out. Can. And push it to the, look at as many 1-minute candles as we can. Does everybody see how chaotic it is? Does everybody also see how sometimes what's happening right in the pre-market has no bearing on what it does when the market opens? So imagine you're a day trader, you're watching the pre-market, you place a trade, and then when the market opens, it does the exact opposite. Or some, and then the next time it follows through with whatever it's doing. So now you're trying to approach this situation as a day trader, as a repeatable process to make money, is if sometimes what happens to the pre-market follows through, but other times it does the exact opposite, or it's absolute chaos. What are you left with? You're just guessing, right? It's like, is this the one that bounces back, or is this the one that flushes? So for me as a process, I was never able to figure it out. Maybe somebody has. The only thing I arrived at as a decision process is if I can't make a decision with any certainty or clarity, is don't trade that sequence on the chart. Now, you're free to make your own decision. I'm just kind of going through my thought process with all of you of why I do what I do. There's a lot of questions. Hey, what do you look for? What would you, folks? I answer that question the same way, especially when I talk to all of you one-on-one. I know exactly what I would do. Your goal as a day trader is to figure out what you would do. Is this a situation you want to be in? Okay, if yes, how do you approach it? So let's talk about Tesla. Would it be useful to know that this is what the daily perspective looked like? To me, the answer is absolutely yes. Okay, let's zoom out to 5 years. Everybody can really see. Did the area it failed at happen at a significant point in the past? Meaning we weren't at an all-time high, so was there past resistance? Answer, absolutely yes. Now notice it tried to go above this recent fail point here. But there was bigger things going on. A lot of these things popped and dropped the bigger size. And then, does anybody know what happened here? Raise your hand if you know what the news headline was yesterday for Tesla. They delayed their robotaxi event. Now, is there any way a retail trader is going to be able to predict that? Is there any way technical indicators are going to be able to predict when a headline hits? No. This goes back to the first point I made. There is nothing based off current and past price action that can predict the future for sure because of things like this, things that change what the decisions might be. And while it may not be a big deal a year from now, in the short term, seeing the bigger chart, seeing the fact that mega caps were being sold, it just added to the pressure and who's buying there? Or more importantly, if you were a day trading bull, who's staying bullish there, at least for yesterday? Okay. It's not just what you want to happen. It's what do you think the collective traders would do when something like that happens? You can see it on the chart. Most of them would sell and reevaluate the situation maybe today. What's happening today is trying to bounce. Is it trying to bounce because everything's over? And that's why historical context can help. We have a broader bounce. But was something like this just a one-day event in the past? A lot of times it's no. When the volatility is high, be ready for anything. And the number one way you can protect yourself is with your position size. If you're a stock trader and you have a liquid stock, perhaps something like a stop order. So you have to decide all of these things on how to manage risk. Oracle was another one. So if we go to the shorter term time frame and we go to 5 days, does everybody see the day I'm talking about? The headline was some AI deal with Musk and Oracle wasn't going through. Now we know that at the bottom of that day, that was the worst of it. But number one, at the time, you don't know where the bottom is. And number two, we only know that it's bounced from there because that's what happened. And anybody who got out somewhere here, you didn't miss anything. And maybe you slept better. Okay. Peter, why don't we stick with your chart for the rest of this session as we go through symbols, because I'm getting a bit of lag on mine. But
Yeah, let me
folks,
try to grab it.
hopefully this is helping you, right? Don't wonder what somebody else would do. Don't ask, what does Rob or Peter think about this indicator, or I use these indicators. Ask yourself, does this indicator help me make a better decision, or am I only using it to try to make a better guess? Hopefully now everybody understands the difference. Does it allow you to decide what to do? I'm entering, I'm closing, entering, adding, entering, right? And if you don't know what to do next as a day trader, when things start happening fast, that's when the mistakes are made a lot of times, is you're not prepared to make the next decision if something abruptly happens. And we've seen 2 instances where no retail trader in the world could have predicted that some headline at that moment was going to hit. So you know that anything can happen at any time. How can you protect yourself? It's by making sure the trade's not too big, because it could have been in your favor. Maybe you were a bear. It doesn't matter why it went down. You wanted it to go down, it goes down. Did it hit your target? Get out of there. And anybody who got out probably had a nice trade and reevaluate. But over to you, Peter. It looks like BLDR.
Yeah, I think what I wanted to speak to for a minute was a little bit of what you just touched on right there. When it comes to day trading, and we can talk about this from day trading, swing trading. I'll try to be brief because I know we're coming up on time, but I wanted to think about it from the pure day trader. Some of the questions came in about choppiness, intraday. What do you do with choppiness? And my answer to that would be, well, is the choppiness hurting you because maybe your trade system is looking at being in a trade up above or down below a certain moving average, or is it a price level? Choppiness can deteriorate some of your profits. So I think I would maybe put that back to what is your trading, I guess, system, or at least what are the few things you're looking at. The second thing I would add on actual day trading is that choppiness might not really be fantastic for a day trader. If you're just sitting on the money, it's not really going anywhere, trading sideways. But if you're staying in a position until it breaches or breaks something, maybe on a longer term basis, even for that day, that's something else that you want to be mindful of. So BLDR example, or at least a quote that was put in from one of the attendees here early, and I'll try to get to a couple of these, but this is why I think looking at a maybe longer term basis, 6 months, 1 year, 3 months, whatever it's going to be, can also help out. So very quick narrative, not necessarily how you have to trade, but if you are looking at this chart, we observe that we're in a downtrend for probably about 3 months or so. Throughout that time, been pretty captive by this 20 period moving average, with the exception of this couple bars here where it broke that 20 as well as the 50. Fast forward to where we were just yesterday. Well, we were at the lower end of this range in this downtrend, got some of that CPI data, small caps moved, economically sensitive, or I should say interest rate sensitive, positions were moving, builders, construction ETFs, this, that, the other. BLDR is one of those as well, which I've probably built half my house from Builders First Source. That's just anecdotal. Nonetheless, wasn't helping with the stock price. What I'm drawing at is yesterday morning, if you're taking a look at this, go over to the 5-day chart. If your trade thesis is we're above the 20-day moving average, that has not happened in about 3 months' time. Maybe I'm feeling as though this gap is going to gap and go, or is it going to gap and trap? What's the answer? Nobody knows. But is the risk reward enough for you to go ahead and either take on a day trade or some type of swing trade if you want to take it out that far? So on the open yesterday, we opened up at roughly, call it 142. That 20-day moving average was probably about 141. So if you're thinking about being able to hold that 20 period moving average at about 141, and I know some of you are worried about the choppiness, you can go ahead and tell yourself, look, as long as we're above 141, I'm going to stay in the trade. But if we break that 141, once again, on an intraday basis, going back to a daily calculation of something like a moving average, I'm going to need to go ahead and get out. Now, what happened throughout the day? Coming over here to the 2-day, 3-minute, it made a push, retraced quite a bit, probably made you nervous, made a push and closed practically at what the day highs were. So swing traders, ask yourself, are you getting out of this position or are you staying in? Day traders, ask yourself, are you getting out of this position? Or as a day trader, you kind of have to. Fortunately, it came back towards price points that you had seen there in the early afternoon there on the close. So those of you saying, hey, I'm comfortable as long as it holds the 20, but I'm a day trader, so I have to get out. All you day traders, wake up. What do you see pre-market? It's up $1 or so. And you're thinking to yourself, well, I just missed out. Well, maybe I'll wait until it comes back. Well, you can kind of shift this forward, shift your goalpost, shift that risk reward and say, okay, as a day trader, I was out yesterday. I want to go ahead and get back in today with what? Well, with the exception that it continues going higher. So we'd already noticed one gap. We get a little bit of a gap here. You can get in sometime on the open. Some of you do not want to trade the open. I personally don't really trade in the first 5, 10, 15, 30 minutes of the day. For me, I would have missed out on what seemingly looks like most of this move. Other day traders want to get in early and often because if there is that volatility, if there is the volumes to support some type of big move, go back to what we talked about. Why are you going to get out? Well, one avenue would be if it breaks yesterday's highs. It looked like we had resistance again, closed closer to the day's highs, bounced above it. So as a day trader, maybe you're getting in at 150. Ask yourself, is that drawdown from 150 down to 147.50 worth it? Is that $2.50 on my shares on a $150 investment enough risk to take for the potential reward? And that's going to be completely up to you as to where you're drawing these lines. But I think, especially on an intraday basis, we can see and observe moves that happen very, very quickly, but you're not going to, at least in my case, see very many gaps, meaning that the price didn't just come from 147 5 minutes later down to 130 on a gap like you're going to notice overnight. That's something to keep in mind for swing traders versus day traders. When it comes to profit taking, and then I'll open this up to you, Rob, with our closing time here, and I can stay a few extra minutes if you can. Look at this on the longer term perspective. Why did I get into this trade, this hypothetical trade? It's because it crossed a 20-day moving average, something it hasn't done in months. But what happened before? It got above that 50 or towards it, hung out for a day or two, and then failed. So if we've been captive to some type of moving average for a period of time, we get escape velocity, get some type of $20 move in 2 days' time, and we're on now that next force or that next order of magnitude larger 50-day moving average. Might that be a time to go ahead and take profits? That's going to be completely up to you. Do you want to take profits right as it meets that? Or do you want to see how it plays out? Is it going to drift back in lower for the day, find some support, and then push higher, or at least close on the day highs like we had seen yesterday? Nobody knows, folks. And that's why I think going back to what are you going to do for better or worse can actually give you a bit of confidence and less of that emotional tie to it when you know that within the realm of possibility, this could open and check right back to that 20 period moving average and cascade lower, some like what we had seen before. If you know, look, I'm buying in at about 143, I'm going to get out at 141, might lose a couple bucks. If you can withstand that, plan accordingly, have your position sizing, and then potentially be able to reap some of the reward. Just make sure that that risk reward you have is worth it. And then I think a question came in early, and I'll open up to you, Rob. If you wanted to, let's say, get out at 141, but you've got a bad feeling and you want to get out at 141.05, do that. You know, if you said, hey, I'm going to buy at 143 and it's at 143.02, but you really feel like it's moving higher, go ahead and do that. There is going to be some intuition and gut to this. I think it ties back to if you said you were going to buy at 143 and get out at 141 because you're looking for profits at 155, now that it's at 154, well, that playbook might not be intact. You're not going to say, okay, I'm going to buy at 154, hoping it gets to this 50 period moving average at 155. And for that dollar, I'll go ahead and risk 14 all the way down to that 20 period moving average. Now that risk reward, not at all in your favor, even on the shorter term basis, much more long-term basis as well. Hopefully that
Yeah,
makes sense from mathematic way to give yourself the ability to be wrong, knowing that you've already seen what being wrong looks like and you're okay with it. If you can withstand being wrong, then you can go ahead and look for those opportunities where hopefully you're going to be right.
Yeah, I mean, folks, there was a question saying, hey, I'm looking to finesse entries for a swing trade. And this is a perfect example. So let's connect the two together. Where are we on the daily? We're just underneath the downsloping 50-day moving average. Is that correct, Peter?
That's right.
Does everybody see the sequence where it gapped up, but then rejected right underneath the 20-day SMA? Right there. So if you're looking at this situation, it's holding the majority of its gains so far on the intraday. So could you enter here anticipating that it is going to break through? Maybe not today as the entry point for a swing trade. Of course you can. What's the most important decision though, is if it fails, when are you going to close? Does it fail today? Or does it fail in some future scenario? Or does it gap up above and then fail? So for that question of using short, like the day trading perspective for entries, the most important decision is always not what you want to do. Hey, I'm looking for an entry for a couple of days. It's where is your response point when it starts failing? The other question was, when do I exit a trade? And I'm not sure if I clarified this earlier. I don't have profit, target, or loss based on dollars. I have profit or target based off charts. If the chart setup triggers an entry, I close if that gets invalidated. Can you switch back over to SPY really quick? From the intraday perspective, let's think about what we know now that we didn't know before. Looked like it was coming down and then it just stops going down. So ask yourself this question again. If you were, how many people would go bullish on SPY as a day trade right now? So conceptually, okay, it checked back. What is the goal? The goal obviously is for this to break through the peak it just went through. And therefore, if I did enter a bullish trade, would I, right? Would I still have it if for some reason it went down below the point it just bounced from? Not a chance. Why? Because that's not what the chart should look like if I'm correct. That's what losing looks like. Now, I'll be in the Friday briefing and we'll know a little bit more about, does this break through to the upside? So what I'm trying to specifically do is use the charts. I still have to guess what I want to do. Would I enter the battleground here? No. I'd rather wait to see if it can win the battle. Somebody's asking about what type of confirmation, chart confirmation. There's no point in entering a bullish position if it just fails here. The stronger version should break through. Or it could just chop around in this range. If it stalls here, maybe just chops around for the rest of the day, right? And you know, if you're a day trading bull, you definitely don't want it below that low point because that's not what it should look like. Hopefully that makes sense, folks. Let's spend the last couple of minutes, I know we're at time, just going through the different symbols. Cliff want to look at the symbol just O.
Yep, we'll get to that one. And there's another just very quick intraday example of even in the minutes that you're looking at that. Okay, is a 0.1% drawdown worth, if your profit target is taking out this higher, at least matching that high, 0.1% to the downside loss for 0.25% to the upside? Coin flip, so to speak, on whether that's going to happen or whether you're going to have to take those losses. Who knows? But that's another way just to look at those risk reward metrics and see, is it worth it to you or not? Oh,
yeah. So let's look at this sequencing so far. So what do we have? We have a gap, a push, and a retract. Now it's bounced and now extended past the prior peak. So as a day trader, the justification for staying bullish here is it doesn't retreat below the high point of the day. Why? Because that's not what the really strong sequences look like. This is that game of shelves I was talking about. Pushes, retracts, finds a bounce, gets above the prior peak. The really bullish version of what's happening right now keeps going higher. Now, are we at some significant resistance? It looks like it's trying to push past some resistance. Doesn't mean it's going to make it. So I'm looking at multiple timeframes to see, is it winning the battle on all fronts? And I don't want it to lose the battle that I just identified on any time frame. Sometimes stocks go up and then retract. Sometimes they go up and fail the next day. That's not a day trader's problem. That's a swing trader's problem. All I know is I don't want it to give that up. Otherwise, the reason I would be in a bullish trade would be invalidated. Let's look at Microsoft. What are we getting? This is down slightly on a broader green tape. Would I want to be aware that this is pulling back from an extended level? It's trying to hold, looks like what is it? It's 20-day moving average. Okay. Does it win a battle? But the most important decision you make, folks, is your next decision. It doesn't matter why you enter. If you enter a bullish position, the only thing that matters is, does it go up? It doesn't matter why it's going up. And the most important thing is, if it starts going down, when are you going to close? This is a logical place for it to try to bounce. Now we just have to see, does it bounce? Okay.
Same thing for intraday basis, folks, being able to look at that 20-period moving average maybe as the out. I mean, right now, 20 on that daily is 453.49. That's 40 cents lower. I mean, we're talking a tenth of a percent there. If that's going to be your intraday bar out, which obviously intraday, it's already broken that. If you are hoping that it has that resurgence, maybe on a daily basis, is 3% outside the realm of possibility for what could happen to Microsoft? No, not at all. But think about that from a probability standpoint as well. Where is your risk? Where is that defined? Where are you looking to get into? And then for you swing traders, do keep in mind that you could get into this saying, okay, well, Peter talked about as long as it holds the 20, this thing could open at 450 tomorrow, or 445 or 440. That's the difference between the potential for those overnight gaps, higher or lower, depending on what side of the market you're on, versus the intraday saying, here's my line in the sand. If it breaks, I'm out. If it recaptures it, maybe I'm back in. Completely up to you, but that's just another thought.
Yeah, XLE.
That's a good one.
Yeah, and folks, whatever your process is, you just want it to be consistent, because the goal is to be able to repeat this. And I get a lot of questions. It's like, hey, what's your weekly target for profit, folks? This is not a 9-to-5 job that gets paid a regular salary. There is no typical day in the life of a day trader. You have to respond to each day that's presented. My goal now as a older trader and not as quick is I try to avoid choppy sequences, right? That means there's a lot of staring. I also only trade things I'm familiar with. Some of you were asking, how many stocks should you trade? You have to decide all of this, folks. There's some traders that try to scan for things that are moving and try to jump in there. For me personally, I would never trade a situation I haven't prepared the chart for. Those are decisions you have to make. So, Peter, can you zoom out just a little bit on your daily chart on XLE? Okay, so far, we are trying to potentially turn the corner of a current intermediate downtrend. You can see that it just bounced near, what is that? It's 200-day moving average. So
Yep.
it's put in a higher low, right? But it's now at the, basically, close to the decision point. So remember, as a day trader, am I trying to anticipate that this battle is basically going to be approached and or won today? Those are the types of decisions that are different than a swing trader that might be entering here saying, hey, it put in a higher low above its 200. I think it's going to succeed and break this concept of downtrend. But both traders should be prepared for what happens if it doesn't make it. Hopefully everybody sees how the exit is infinitely more important than the entry. You could randomly decide to buy or short a stock. Why? Because it can either go up or down, meaning you're either going to be right or you're going to be wrong. And as a day trader, you typically find out quickly if it's right, volatile and trending. It's the choppy markets. And again, you can try to trade the chop. And that's for each trader to decide. Somebody's asking using different things like ATR, Bollinger Bands. Once again, folks, there's no correct thing to look at. For me, just the concept of trend is enough for me to trade because that's how I started. My mom taught me by drawing trend lines on newspaper. She was a longer term investor. But she didn't have a process for, well, what happens, Mom, when we're way extended away from your trend line? And that's where the volatility bands give me a different perspective. So it's not a guess. It just gives me a different perspective to be able to make a decision that I didn't have without it. And I'm no Goodwill Hunting, so I'm not out here trying to mathematically compute standard deviation away from a moving average in my head. I'm not that smart. So I just have these bands on here to say, hey, are we extended in whatever time frame I'm looking at, whether it's 3 minutes, 15 minutes, daily, weekly, and I want to be aware, are we extended or did we try to gap extend it? All right. So you can see on this XLE chart that when something is trending powerfully, can you add a 5-day SMA onto this on your daily? Everybody see that? When something is incredibly strong, it barely breaks its stride in terms of trend, and notice the direction of the trend. Price is above, upward sloping, it retracts to interact. So as long as that condition is current, is that something I want to be aware of? Yes. Now you have the choppier sequences because the trend was damaged. And I'm talking about the downtrend. The downtrend was damaged by this most recent bounce in the short term. So now we're approaching the battleground of shorter term versus longer term concepts of trend. Do I want to be somebody who tries to guess which side wins the battle? Me personally, the answer is no. You guys battle it out. And whichever side looks like they're winning, I'll join. So we got the Olympic. Let's maybe go through one more. What's one more symbol? And somebody also asked how to add RSI with coloring. So why don't we do that? Let's look at.
I'll do both those things. Last thought, just that ramp that you said when it respected the 5 to the point of view, well, y'all battle it out and see. Not exactly the same, but somewhat similar or adjacent. It was on a run. If you take a look at a 2-year chart, actually was flirting with some of those previous high points, had a downtrend, was in a bird nest of moving averages. And then, like you were mentioning, Rob, found that short-term momentum on the way higher. So some of that sitting on your hands, waiting for things to improve, short rejection from a previous high, able to go ahead and get past that previous high, respects the 5 on the way up. I know that's more of a longer term basis, but fast forward to where we sit right now, downtrend breaking, folks can get antsy and think, oh, it's gonna move higher. Sometimes this break can take a little bit of time. Previous ones would have been a bit lower. So just keep that in mind. Some of those more major moves, especially for you swing traders, can look ripe for the taking, and then there's that confirmation element that goes into it.
Yeah,
You were saying, Rob?
why don't we use Boeing as the last example and start on this daily chart.
So slow.
Folks, does everybody see the differences in what we call the conditions of price, trending up, down? Now, Peter, this goes to your, are you a long only trader? Folks, look at the left side of the screen. See how it pops up, gaps up, fails to make a new peak, and then starts breaking down? And then every day it just bled down underneath the 5-day. Who's taking a bullish trade when that's the condition? Now flip it around. It failed the first time to break that condition and made a lower low, but then it turns the corner. And then notice it basically does the exact same condition of price for a while to the upside. Who's shorting that? Notice how it failed. It stalls, it breaks trend and then breaks down after going sideways for a little bit at the top. And of course, there's catalyst in there. Now, let me ask you a question, folks. Does the current price action where we are right now, does it look anything like the powerful down sequence or the powerful up sequence? No. So is that something I would be aware of when I zoom in, if I'm trying to day trade this thing. Now let's look at the intraday. Okay. So I just take those same concepts, then I just apply them to whatever frequency I'm looking at. Am I aware that there is a collision of moving averages underneath? Yes. So when it's down there, would I short it there? Why? If I did, I know exactly what I want it to look like. It should crater down below those. Looks like it's trying to respond. Move on to something else. Pick on something else. Pick on some other stock today. Oh, maybe one last one. Let's go over to Delta. So we're now post earnings by a day, and rather 2 trading days because it was pre-market yesterday. For whatever reason, it went down, right? Just the outlook wasn't good enough. So you can see that it tried to bounce. Where did it try to bounce? It's 200-day moving average. Who would short there? And remember, folks, specifically as a day trader, knowing that even non-technical traders follow the 200-day. Now, it's easy to say with the benefit of hindsight, but can you look at the extended hours? Folks, think about it. If you were short Delta ahead of the catalyst, where's a logical place you would take profit as a short-term trader? The 200-day moving average. Now, it could have cratered through it. Remember, when Boeing went down, it just stopped at its 200-day for a day, said hello, and just kept going down. But I'm thinking about in this moment, very short term. Where is a battle that bulls might step up and other bears might take their money? Exactly where it tried to bounce. Now, is it going to hold above it going forward as a swing trader? Who the heck knows? Look at can you go to Nike? And I know we're going way past time, folks, but I do think these are useful examples.
Yeah. And there were a lot of you asking for maybe this session to be more routine. So maybe I'd love to join you, Rob, or whoever, but we can maybe try to make this something maybe, if not once a week, once every couple weeks, or at least once a month is one of our staples. If that's something you want to see, let us know, drop us a line, but I'd love to join these because I thoroughly enjoy these types of exercises.
So Nike had a disappointing outlook, right? Disappointing earnings, gaps down. As a swing trader, is that something you want to be aware of? Whatever the low point is, that if it doesn't hold that, it could get worse? Yes. But as the day trader, unless you were in there, can you go to the intraday chart so we can see when it flushed down? Just go to maybe 10, 15 days? Right? So you're always trying to quantify, right, as a day trader, what can I get from here? What is the purpose entering right here? And maybe one last one if we go to Pepsi. Pepsi had an initial poor reaction to its earnings. And then what happened?
Mm-hmm.
Let me ask you a question. This is almost this, like, again, we don't know what's going to happen from here. But where did it bounce? It bounced roughly at the lowest point it's been at. Again, it could have cratered right through it. But in terms of thinking conceptually, if it's going to bounce, that's the most logical place. And so if I was short there, I would be ready to close. If I wanted to be a bull, I would be ready to close if it didn't bounce. Can you look at the extended hours for the past 2 days? And you'll see exactly what it looks like. Go ahead.
I was just going to mention, I was in that morning market briefing when we looked at Pepsi and Delta and actually looked at them ahead of time, drew some lines, and then looked at them after the fact. And I had said on Pepsi, it had that little bit of a bullish day, or at least morning to it. So did Delta. The difference is Delta got to a point and then drifted lower. Pepsi's going higher. Folks, I don't want to say coin flip because there's more to it than that clearly, but if it's not going lower, it's going higher. If it's making higher highs, it's making higher lows. That's something that you can stick with as far as the trade's concerned. But then when you looked at that Delta chart, it was ending on the day highs yesterday, but then breaking back down today. So two that had a little bit of a bounce, and then of course diverging now, one up about 2%, one down about 2%.
Yeah, and this thing could be lower a week or two from now, but that's not what day trading is about. And that's why you really got to decide, folks. And it's not for everybody, and different styles might favor different personalities, might depend on how much time you have, right? How much time you want to spend on this. But the main differentiator is the day trader doesn't take home risk. Let me ask one final question, we'll call it. How many of you have been day trading already, entered a trade that started losing, and you decided to hold it overnight? Like, it wasn't intended to be a day trade. You just didn't want to close. So let's think about that. As a process, what can go wrong there? A smaller loss can balloon into a bigger one if it doesn't bounce back. So listen, you're allowed to do whatever you want, folks. But if the purpose of entering the trade was a day trade, be very mindful of where you draw the line in the sand. And Pepsi's own chart, or some of these charts, look, if you entered in a high point in the sequence, it's easy to look back on the ones that bounce back and say, hey, I'm glad I didn't close that thing. You're going to feel great about it. But as a process, if your response to being wrong and losing is, I'm going to take the risk of holding overnight, hoping it gets better, you're allowing the worst scenario to potentially exist. And if that's ever happened to you, what's the process solution? Take the small loss and reevaluate. Or make sure you're aware of the risk you're taking by doing so. Hopefully this session has helped you, folks. I know maybe some of you were hoping for, hey, they're going to tell me the secrets. Folks, believe me, when I was younger, I was hoping there was a secret. There is no secret. Okay. Preparation, execution. You either get the day you want or you don't, or you get the sequence you want or you don't. Are you ready to deal with the one that doesn't cooperate? If you can't handle being wrong, if you can't tolerate losing money, trust me, go do something else with your life. Losing is a part of trading. The goal is to lose small to try again. I'll see a bunch of you in the Friday briefing, I'm sure. Peter, I'll give you the last word.
Yeah, I think that's it for me as far as the week's concerned. Overwhelming requests for maybe us to come back and do this session more frequently. So appreciate that. We'll try to maybe have a meeting about Rob and I maybe trying to continue this as some type of a series that we do much more frequently. And I did see some of you that were asking the day trading concept, but then also swing trading. So I'm all for that. I was trying to pepper that in a little bit towards the nuances of that BLDR and thinking about kind of longer term. Maybe you are having a pretty tight stop intraday, but then if it is able to go ahead and run, then maybe you let it go a bit further. Keep in mind what we had said though, as far as that gap potential, if it's overnight in swing trading, if you can bear that or tolerate that, then that's perfectly fine. I think the last thing that I would say is, don't let a trade turn into an investment because of losses. If you are looking to let a maybe day trade or entry that you have a pretty close or reasonable manageable loss in mind of, don't change that side of the equation. If you want to stay in something where you've got profits, that's then maybe in future sessions when we can talk about using or utilizing different trade types, whether they're mental stops, whether maybe they're trailing stops, where you went into a trade with a pretty condensed thought process of your risk reward strategy. But now that that reward's actually coming to fruition, maybe using something like a trailing stop, or at least increasing your stops personally or your exits to where you're able to go ahead and capture as much of that profit as potentially possible, versus kind of keeping that out and line in the sand, pegged to a much, much lower
Yeah, Peter,
level.
Peter,
Go ahead.
looks like we got to call it. The next class is starting, folks. Hopefully I'll see you in the briefings. And again, don't rely on luck, okay? Have a process, manage risk. That's how you can survive and potentially thrive at this. Take care, everybody. We'll see you next time.
Take care.